Welcome to Financial Revelations. I am David Safransky, your host. It's 2023. Yay! 2022 was kind of a bad year. Boo! The stock market stunk. The economy is substantially overheated. Eggs are $7 a dozen. Gas has kind of come down. Natural gas has come down in price because we had a cold snap, and now we have a warm snap, so natural gas prices are falling. That's really a good thing. But man, it was good to get 2022 out of the books, and 2023 hasn't really started any better, but we got a long time to go, so it's still pretty fresh. The wrappers are still coming off. So I don't really ever do New Year's resolutions, but I do have a few suggestions. So I think if your life needs a change, I wouldn't wait to the turn of a calendar. I just do it. So here's some of the things that I think I'm going to do this year. I kind of do them now, but I wanted to share them with you. Number one, I compare myself only against a previous version of myself, because I don't know what it took you to get to where you are and what you had to go through. So it's not a fair comparison. Compare yourself only against a previous version of yourself. I kind of liken it to when you see a horse in the field. We have Amish country around here, and they have blinders on. And that is so they don't worry about the other horses. Don't worry about the other horses. Let's worry about ourselves. The other thing that I am going to do this year, I've never done this before, but I wanted to do this for a long time, and I'm going to do it, and I have one picked out. I'm going to buy a tuxedo. How often do I wear a tuxedo? Never. But I will now, and I'm going to stay that size. So I had the enviable position of being at my goal weight. Thank you very much. I'm going to get that tuxedo. It's going to be a Hugo Boss, and it is going to be sweet. I'm going to buy it in Chicago when I go there next. I'm going to tip more when I go out to dinner. And people are struggling. There's no doubt about it. There are people who are living kind of on the margin. You know, they just had enough money before. They just had enough to get by. They don't have enough to get by now. And so I want to be, if I'm going to go out to dinner, I'm going to tip. If I was a bartender in college, and I would work on Sundays, and a lot of people, I worked at a major chain restaurant, Chi-Chi's. That's where I met my wife. When I first started working there, people would wait for 2 hours to eat Chi-Chi's. That was a big mistake, by the way. The food wasn't bad, but it wasn't 2 hours worthy. A lot of people would come from church on Sunday. They were horrible tippers. I'm a believer. I go to lunch on Sundays a lot after church. Don't be a horrible tipper. Be a good tipper. Make people want to fight for your table when you come back into that place. So that's what I'm going to do. And I am going to do this. I kind of did it last year a little bit, but I'm going to do it wholesale. I'm starting back in school. Yuck. I'm going to study. Going to read late nights. I'm going to do that stuff. It's yuck, but necessary. You got to get and stay educated. The world is moving at a pace that is like we've never seen before. They talk about how frequently we double our knowledge or double our technology. Well, when I was a kid, it was like every 6 years. Now it's like every 6 months. And you look at things like the metaverse, which I don't really know what it is, but people are investing in it. Things are happening quicker. We have to kind of stay on those things. So one of the things that I like to do at the beginning of the year is put out some predictions. I don't really know what's going to happen. I have a little bit different insight into things because I think the past is a pretty good predictor of the future in a lot of ways. And I kind of read the tea leaves, and this is what I do for a living. It's what I went to school for. I've never done anything else in my professional career than this. This is what I do. So I spend a lot of time kind of thinking, looking, interpreting data as it comes in to try and figure out what can we do that's a little bit different, a little bit better, make people money. I didn't make a lot of people money last year. The best thing I could have done for you last year is leave your money out of the market, which we did do for a lot of people. So here's what I think is going to happen. I think this year is going to be a crypto winter. I I got behind crypto a little bit. I started to get intrigued by it because it was making a lot of money, but I think that was Fed fueled. And I don't think it's real. I cannot find a way to get my head wrapped around crypto to fit it into a portfolio where it makes sense. Last year, one of the lessons that I learned last year is when people called me about NFTs, I didn't ignore their phone call, but I tried to dissuade them as much as possible from buying an NFT. And that was a good decision. NFTs were really cartoons that people were paying millions of dollars for, trying to resell to the next sucker. And in really most cases, it didn't work. So I think crypto's a lot like that. I don't know what you're buying. I don't know what you're selling. I don't know what we're holding it for. I have no metric to say, oh, crypto's doing way better, except for just the raw price. And as we've seen, that isn't always the greatest predictor, because when there's a lot of money floating around because of Fed-fueled increases in money supply and the government spending, people don't know where to put their money, so they put it in crypto. They put it in NFTs. And when that money disappears, those values disappear. And one thing for sure, Fed's in the market. They're not coming out just yet. A big part of my predictions revolve around the Fed because it's so important, and what they do is so critical to what performs and what doesn't perform. But I think the Fed talk and the Fed action are going to be two different things. I think they're going to talk a way tougher game than their action is going to show. I think that they have 3 more rate hikes, maybe 2. I think they have 2 or 3 more rate hikes this year, and then it's stopped. So January, I think, is kind of dyed-in-the-wool 50 basis points, half a point. Well, that rate hike comes, so their meeting is at January 31st, February 1st. Kind of odd timing for a Fed meeting. I don't like it. I don't like when they do things like that. And then they don't meet for February because technically they have a January, February meeting. They come back in March, and I think they do 25 basis points and maybe stop. If not, I think they do one more 25 and then they stop. The data still isn't like great for them to stop, but it's getting better. So housing prices are starting to come down. I was in Florida for New Year's. I have a great nephew that's really cute as a button. 2 months premature. He's 4 months old now. He's doing great. Thank you. I know a lot of people had mentioned that to me in emails and stuff. He's really a cute kid. I'm not going to put a picture up of him because I'd have to ask his parents. I don't want to do that. But trust me, he's a Polak and he's cute. But I saw houses sitting in Florida. Some of them are on the market for 200 days. Well, I'm old enough to remember a year ago when that wouldn't have happened, when there would be a line at their front door to try and get in front of the realtor, or all you had to do was tell your aunt and somebody would buy that house. Well, I think they got 1 more percent in them, or 0.75%, and then stop. And the market will respond okay to that. I don't think it's going to be taking off and say, oh, the Fed's out. But I do think that the market could say, okay, now we can kind of assimilate these rates. And the market is what we call a forward discounting mechanism. Once we know what the conditions are, we can factor them in. So the Fed is going to talk tougher than their actual response was. And yesterday, just yesterday, I'm filming this on January 5th. So January 4th, there was a bunch of Fed people coming out saying, oh, rates are going to be higher for longer. And well, the data is going to decide that. They're not going to decide that. So if they do go 1 more percent and stop, and things start to deteriorate to a level where we're recessionary, they're going to bring rates down. And I think what they're going to do is sometime in late 2023, probably more likely early 2024. So we're a year away from this. I think the Fed is going to bring us back down to the rate that we're going to sit at while the economy heals. And that could be 1% lower. It could be 1.25% lower. One thing for sure, they're going to ratchet us down very slowly. They're going to ratchet us down slower than they ratchet it up, because what they don't want to do is overstimulate and overfuel the economy again and drive inflation even worse. So that's where they're going to be at. That's what I think is going to happen in the Fed. Now, one thing that they are doing, and this is a favor, so there's two sides to this coin. There's a silver lining in this, and the bond market is back in play, and it cannot and should not be ignored. And I've been, when we're at the bottom of the interest rate cycle, I don't like bond funds. I hate them. All you're going to do is lose money in them. But at the top of the interest rate cycle, different story. So I think we're 3 or 4 months away from the top of the interest rate cycle, or it's like a hand grenade. You don't have to get it right on the head, but just get close. We could buy bond funds at the top of the interest rate cycle, because when rates come down, bond funds go up in value. So bonds are a great way to de-risk a portfolio, because you get, if you're buying a government bond, a U.S. government treasury, it's guaranteed. You're not going to lose money in it. Inflation may be higher than your yield, but there's not going to be, if you hold it to maturity, you're going to get all your money back. So de-risking with bonds and governments and corporates, not a bad idea. Now, listen, the bond market works very different than the stock market. It is not an immediate thing. You got to go out and get bids. There's interest rate risk. There's credit risk. I want you to use a professional. If you've never bought a bond before, I was on the radio today. In fact, every Thursday I'm on WCRF 103.3. Moody Radio has an app. You can download the app. You don't have to be in Cleveland to hear it. 8 to 9 a.m. I'm on the radio. I want you to do that. I love WCRF, and the people there are awesome. You can also call here, 1-800-344-2534. Corey's going to put these numbers up and the information. And if you have questions, I want you to email Corey, because I want to answer your questions. And a lot of times they're so nuanced that we'll just email directly to that person. But the broader questions I like to answer, because if you have it, other people have it. And that's Corey at EPSF.com. Corey at EPSF.com. But if you're using the bond market, you've never done it before, use a professional. I had somebody call today on the radio and say, well, somebody's talking to me about a $4 stock, and I've never invested before. I don't know anything about the company, but I want to buy it. Stop. You're going to make a mistake. And what happens is people do something like that. They don't know anything about it. Then they lose all or a big portion of their money. Like, well, I'm never going to invest again because every time I do it, I lose money. Well, that's because of the way you did it. And that can happen in the bond market too. There's some bonds that are paying 30% interest. There's a reason for that. They're very, very risky, and you might not want to do those things. So if you haven't done it before, I want you to use a professional and get it right. Don't go into investing and make a classic personal investor mistake of buying something that's way too risky for you. I want you to calculate your risk, talk to somebody who knows about risk, and do it right so you have a good experience. Now, we can't control the market and what happens after we buy, and even good companies are getting beat up right now. But, I like to buy really good companies on really bad news. In fact, the better the company and the worse the news, the more I'm interested. There's some of that going around right now. Now, you don't have to buy individual stocks. You could do it with mutual funds, and you could do it with index funds. Vanguard's a great company. Fidelity's a great company. There's a lot of great companies out there that can help you. But if you've never done it, use a professional. There's a little bit of a science to it. It's not rocket science, but there's a little bit of a science. And I just want you to get it right so you don't have a bad experience. You can always reach out to us. If you're going to meet with us, we ask that you fill out a fact finder, because I want the information before you get here. And everybody does that. If you don't, there's one person that's never filled out a fact finder for me. One of my favorite people. I can't tell you who she is, but I let her come in, and that was a good decision. But I ended up getting all the facts. But when you come in, you're going to fill out that fact finder first. We're going to know those facts so we can talk about what's really important to you, which is investing and growing for the future. And it doesn't have to be like everybody else. It doesn't have to be aggressive. It doesn't have to be conservative. It could be a mix. What do you need for your personal situation? That's what we want to invest into, not some program trade that 90,000 other people have. So, but we're not the only source. There's a lot of great companies. I want you to really look around, do your homework, find somebody that you like, that you don't mind sitting down with, that has a good technology suite that you can look online, follow up. Don't just blindly trust anybody, including myself. Do your research, look at things, read your statements. There's a lot of, wherever there's money in people, there's fraud and deceit. Not in this office, but there is fraud and deceit out there. We see it every day. That's why you got to stay up on things. It's in your best interest. And I want to take care of people, whether it's here or someplace else. So call if you have questions. We're looking forward to talking to you. If you're on our email list, you got to be a client to be on that in general. We're going to send out the quarterly newsletter tomorrow. And so you'll get some of this again, but some other stuff too. I am David Safransky. This is Financial Revelations. I'm a real American and the voice you can trust.